Hey, what's going on, everybody? Welcome back. I know it's been a few weeks since my last update, but rest assured, in case you were worrying, I have been up to quite a bit of stuff with trading and research and software development. So I'll give you some idea on what's been going on the last few weeks and what's been in the works. So first of all, market maker strategy still is in development, but I basically kind of put that on hold for now. I've got the strategy up to a place where I'm recording some more statistics about it, and I'll be looking into those a bit further. Specifically, what I'm taking a look at is the markout rates that I'm getting on my trades, meaning when I get filled on an order in 5 seconds, 5 seconds into the future, 30 seconds into the future is the midpoint of the price better or worse than what I was filled at. So if I'm seeing that on average, I am getting filled at a much worse rate than the price 5 seconds from now or the price 30 seconds from now. That means my strategy is getting picked off, with adverse selection, meaning informed traders are picking off my bids and my asks, and I need to tune my entries a little better. So I've set it up all the versions of my algo that are currently running out there right now to record this data, and I'll take a closer look at it once it's kind of been running out there for a while. But in the meantime, the other thing I'm working on, and I kind of talked about this in my last video, is taking a look at the funding rate arbitrage opportunities between the various crypto exchanges. And specifically, this basically involves buying a perpetual futures contract on one exchange where the funding rate is low, and then shorting on the exchange where the funding rate is high, and just sitting and waiting and collecting the premium on the exchange where you're short, and while paying the premium on the exchange where you're long. So I basically been looking at doing this on a few different uh, decentralized exchanges. I definitely like the idea of non-custodial uh, exchanges where you basically, you're still depositing your funds into a smart contract, but the exchange itself isn't taking custody of the funds. So, there's a few pretty big decentralized exchanges. dYdX is one. Um, Paradex is another one. I like Paradex because they pay taker rebates maker rebates of a half a basis point. So if you're able to get in and out with limit orders, then you're actually collecting a rebate and not paying a commission. And then Hyperliquid, cool thing I like about this exchange, a ton of liquidity here, a lot of volume across a number of different coins. But I'll give you an example of a current trade that I have on right now, which is Hype. And on Paradex, it's paying an annualized rate of 87%. So basically, I went short on Paradex this morning, and I'll be collecting this 87% annualized funding rate. Now, I want to stay delta neutral, so I went long the same amount of Hype over on Hyperliquid. And earlier today, this rate was down closer to 12%. Now it's moved up to 64%. So the spread between the two is a bit narrower now. It's about 24%, which still isn't bad, especially when accounting for leverage. But it's not as great as it was this morning. But basically, Paradex pays out their funding continuously, and then you realize it when you close out the trade. And then Hyperliquid pays out once per hour, and so you'll kind of see this rate fluctuate, and then whatever it is when the timer goes off here at the top of the hour is what you will pay or collect. So I'm just starting out trading this strategy kind of in a minimal position sizes. I'm working on basically trading a 10K account with this and seeing how it goes. Um, the other interesting thing is there was a new coin that was listed this morning on Paradex and on Hyperliquid. SYZY, and it is paying an insane amount to the longs. So the funding rate's like negative, meaning the shorts pay the longs, negative 5,000% annualized. And this is on Paradex. Now the reason for that is the futures price is down at 77 cents, the spot price at 88 cents. So people are willing to pay a huge premium to get short exposure to this coin. Now, if we look here over at Hyperliquid, it's a much lower rate. I mean, it's still super high, almost, it's negative 955% annualized. So this could be a great trade right here for the funding rate arbitrage. I mean, I don't know if I've seen a funding rate this high on Paradex before. Now, the reason I didn't get into this trade earlier today is because I already had a trade in Hype put on, and this coin had just got listed, and there wasn't really any liquidity in the order book at that point. So I didn't want to jump in on this thing and not be able to get out. But if it's still around, the spread still exists, and there's still volume on this in about 24 hours from now, I will look at closing out the Hype position and opening up one over here. So some of the challenges with this strategy or the considerations are, you got to make sure all of your costs are getting factored into this, right? So your commissions, the spread that you're going to be trading. So trying to get into both the long and the short position using limit orders is really risky, because you could get filled on one side of that spread but not the other, and then the market runs away from you, and then there goes, hours and hours worth of funding income. So what I'm trying to do is I put together a spreadsheet to kind of, given the amount of leverage for a particular coin, so whether it's 10x, 20x, 5x, or whatever, and then the funding rate differential, and then the commissions that you're going to pay or collect, what is kind of the payback period that you're going to have to hold this position for before you just break even. And this is in terms, I've built this spreadsheet in terms of basis points. So basically, like there was a spread on earlier today where it was 103%. Oh, this might have been for the Hype spread, actually. 103% on Paradex, 19% on Hyperliquid. So the effective return using leverage, annualized return, is 238%. So that translates to about 2.7 basis points per hour that you're collecting in funding. And so assuming a round trip commission of 8 basis points, so this assumes you use a limit order on the first leg just to get in, and then once that gets filled, then you use a taker or market order on the other side of the leg to just complete the hedge. So for Hyperliquid and Paradex, that round trip commission is 8 basis points. So basically, it would be about 3-hour break even before, assuming the spread stays at this amount, 3 hours to break even on the commissions. And then here's the returns over the next 12, 24, and 48 hours. So if the spread persisted for 2 full days, collect 122 basis points, so like a little over 1%. So I've built this I kind of built this out to help me figure out when I should and shouldn't get in. But basically what it points to is really it doesn't make sense to get in and out of these positions because the commissions are going to just kill you on it. So you want to try to find something that's going to have a fairly stable spread, and then just stick with it for probably a minimum of 24 hours in order to get enough funding income there to offset the commissions. Now, so I've had this hype coin spread on for like maybe half a day now. So at some point later on, I'll look and see if that other coin still has the funding spread there, and probably close out this coin and move over to that. So that's the perpetual futures funding rate arbitrage. So I'll be keeping track of the kind of daily performance as well as per trade performance. Now, I already learned the hard way, trying to get in with limit orders on both of these is not going to be a good idea. I just got smoked on the pump.fun coin and got in on one side, on the short side, and then that got filled, and then or no, it was on the long side, and that got filled, then the coin dropped 1% before my short position got filled. So I already lost on that. That 100 basis point drop, I was not going to make up the funding income off of that. So I'd rather just take the hit, pay the extra commission to get in with a market order, rather than try to save on commission and then lose 100 basis points because the market ran away from me. So lesson learned. There'll be a few trades like that did not go according to plan at the beginning of this, and I'll show those results. They'll be included in the results as I publish them. So, and then finally back to the market making stuff. So another reason I kind of put this on pause for now is I'm migrating my infrastructure over to a framework. So everything I have as far as the trading and the market data is built with Java. And so there's an open source framework that I'm adding to. It was originally built for interactive brokers and trading equities and futures and forex and that sort of stuff. But it's kind of an abstraction layer which allows you to plug in different brokerages and different data providers into it, and so you kind of get a unified interface for placing orders and for requesting market data. So where this is going to help me out is because currently everything is kind of very tightly coupled to Paradex, and I want to be able to also place trades on Hyperliquid or dYdX or potentially other crypto exchanges as well. And so instead of having to rework the market making algo logic to have to know how to interface with all these exchanges, I'm going to update my market making logic to just interface with this abstraction layer, and then just build the components behind that for each one of the exchanges. So that is what I'm in the midst of right now. If you are curious where this is at, it's the SumZero Trading API out on GitHub here. And so if you go down into implementations, I've begun adding a Paradex implementation for requesting market data. So both the market book and the level 1 quotes, and I'm just working on the broker functionality. So being able to place and cancel orders and getting account information and funding rates and all that stuff. So And then one final thing too is I finally set up a Twitter account here, so I will probably have more timely updates about what I'm working on and thoughts about what other people are working on, um, rather than having to rather than doing video updates every few weeks. I'd like to do these more actually. So there you go. That's kind of what has been going on the last few weeks. I'd love to hear about what you guys are working on, what you think of these perpetual future contracts, especially the crazy, crazy funding rates, and why people are agreeing to, pay such huge sums to get either long or short exposure to these coins. It's kind of mind-boggling to me. But anyway, hope you guys are having an awesome week, and I will see you later.